Hello, investors. I'm Stuart Kruse, and welcome to Unemployment Thursdays, where we get the U.S. unemployment initial claims number, and it was worse than expected. We were expecting a number of 725,000 new claims, and we got over 850,000 new claims. And to put that into perspective, we've been kind of leveling out at around the 740,000 range, and 650,000 was the worst week that we had during the financial crisis. So we've ticked up, and that's not good, especially going into the holiday season, and especially at a time when all of the payroll programs are kind of running out and we're not looking, or we haven't come to a stimulus deal. So let's look at the charts and see how things look. Right now I have up on here the purple line is, let's just clean this up. The purple line is the current claims at 853,000, and if I'm going to shrink this chart down to a 3-month average, you see a tick down, tick down, tick down, looks like a nice trend, and then zoom back up. So we haven't seen this number of 850,000 since, looks like, well, I guess that goes all the way back to September 12th. So almost 3 months ago. And if you add the 4-week average onto this, well, we just ticked up considerably because we're well above that 4-week moving average. So I said we're at 740,000 claims, and now with an 853,000 claims print, not too good. So if we add the continuing claims on here, and let's go back to a year-to-date chart so it looks a little bit smoother. We look at continuing claims, and we're ticking down, ticking down, ticking down, and here we are we were at 550 or 5.5 million continuing claims, and we ticked up to 5.75 million claims. So we added another 250,000 continuing claims, which makes sense. So you had initial claims, and then another 500,000 people couldn't find a job, even though that they applied for unemployment. So let's look at the unemployment rate. We just came out last week, ticked down to 6.7%. And we're going to look at this next to the U6. So we have the unemployment rate 6.7%, but U6 are people that could have jobs but that don't have jobs. So really more than 1 in 10 people that are able-bodied people are not working. So about half the people that could be working are just not looking for jobs, because the U.S. participation rate, which is what's on the screen right now, is down to 61.5%. And it kind of averaged out. Let's take a look at what the average is, long-term average. I'm going to put a long-term average on the U.S. participation rate so we can kind of see where we're at. 62.6%, and we're at 61.5%. So that's 1% less participation, which is 1 million people. That's quite a few people that are just not participating in the labor force. So we have to absorb those people in order to really get our economy back to work as well. But what else do we have? Oh, I got a phone call. We'll cut that out. So what else do we have? I wanted to take a look at unemployment rate of various countries. Now we can see that the U.S. unemployment rate has changed from a year to date is up. The unemployment rate's up 91%. But some of the other developed countries, let's take off the U.S. The U.K. is up 23%. Japan is up 40%. Germany up 24%. And Sweden up 30% year to date. So in spite of these countries having a lot lower unemployment in general than the United States, they are also suffering. So this is still a global issue, and it's going to be rippling through the economy for quite some time. So it's just not all bed of roses and safety and we're off to the races for the stock market necessarily. We could be in for some bumps in the road. All right. So especially if we do not get a stimulus plan. If we do get a stimulus plan, I would expect that the economy continues full steam ahead. But if we do not, and we start seeing the ripples of people being not able to spend, not being able to work, then that could be bad news for the stock market. All right. So this is Stuart Kruse with Kruse Asset Management on Unemployment Thursday, trying to help you and all the investors to live your life with the odds in your favor.